and the future is now, and the future is adding more positions tomorrow. So the key is here. Basically, we have about 50K in cash, 54, I think, and we're deployed in gold. We have some Google, we have some shorts on XOM, Uber, and AL, and we're kind of waiting to get into Tesla and waiting to get into SPCE. So I'm going to go over those charts too to show you why I'm still waiting and show you the actual companies that we're adding tomorrow and why we're adding these specific companies. So first of all, let's pull up Tesla. You can see, let's get the big chart. Okay, this is where we bought in originally. This is where we sold out. We bought in at 240, sold out at 850. Okay, so we made a lot of profit on that. Now we're using that profit. We turn that to cash. Now we're deploying it for other things that could be beneficial during this downturn in the market or just the market volatility in general. Okay, so basically you can see where I've basically chalked up the flag here. Okay, it's flagged down and it's basically bouncing. Okay, let me zoom in a little closer so you guys can see why we're not adding to this position yet. I mean, I would love to jump in and add back into this position, but I'm basically flipping a coin. Okay, there's a chance that it breaks down and it breaks this flag on the downside. And this is an inverted flag pattern. So the percentages towards the downside. It doesn't mean it's going to break down. If I had to break this into percentages again, I would say it's probably 60 to 70% down and maybe 30, 40% up at this point. Okay, breaking that flag. I mean, it might even be more on the downside just because their exposure in China with the new gigafactory and everything, if they have any closures or shutdown, I mean, they could run into some problems. I'm not saying they are, and I wish the best 100% for Tesla, and I can't wait to load back up into Tesla at some point. But I'm not going to just throw a dart at a dartboard on this one. And I would love to buy in now, but we're going to be patient and watch to see where this breaks. Okay, if it breaks up, but I think it will break within the next few days. It's going to break one way or another. I'm usually good at predicting whether it's going to break up or down, not whether it's going to break. It's very hard to predict in what direction. So I'm not really concerned about that. I'm just, if it breaks up, then we're going to start buying in. If it breaks down, then we hover and wait till it, either retest down here at 600 or whatever. If it breaks up, it could break up to 800. Since we sold out at 850, I've got a little bit of leeway here. We could buy in anywhere 850 and under, and we're still positive on that move. So that's always good. But anyway, that's the Tesla chart. That's what I see. I see this inverted flag starting to form where it gets sold off heavy and it doesn't know what to do again. Doesn't know if it's going to sell off. Doesn't know if it's going to break back up. If anybody's got any ideas on that, please share them. Okay. But, we've got a while before their next earnings report. We got a while before Battery Day. So you can still see some more flux in this company right now. So anyway, that's the Tesla situation. That's why we haven't added any positions. But since I think we've got a little time to play with it, I don't mind adding a couple other positions. And we'll get into those in a minute. You can see the flag here, and you can see how we're running into this to the point. We run into this point, it usually breaks heavy one way or another. Traders see it. They see it break down. They dump it or short it or whatever. They see it break up. They're buying it. This is just kind of how the market works with these flags. Okay. So anyway, we have a little bit of room. I'm sorry, this is SPCE, but you can see the similarity. I'm so used to looking at the same charts. This is space and it's very similar. Let's take a quick peek back at Tesla and see if see how similar Tesla is? This is crazy. And that's why they look familiar. So Tesla looks very similar. It's got the same running into the wedge pattern. Which way is it going to break? Don't know. Don't really care. The point being is just be at the right place at the right time. If it breaks up, buying in. If it breaks south, I'm still in hold mode on it. Or out mode, I should say. Anyway, so gold is our big position right now currently. We have 701 shares long gold. Another good day for gold. It went up about 2%, $3.33 a share. So that was a big part of that. We made about 2100 positive today in gold. I mean, the market went down $950 today and we cleared about 2700 positive. That's playing the market. Okay, we don't need to just take a bath and lose money while the market's going down or the market's fluctuating in a crazy way. So this is why we put this gold position on, to hedge this wild negativity in the market. And it's starting to pan out now. So that's, that's big. So anyway, let's see. I mean, I would love for it to break. So let's put the resistance line on it, the next resistance line on it now. Okay, this is the big one. Okay, 158.50. That's right where it needs to be. Right now it's at 157.50. So if it breaks that, I think that there's a lot of upside to this. But my guess is it's going to hit that wall and kind of bounce back down. So, but I mean, that's just guessing. So, I mean, we're still long on gold temporarily. So, anyway, that's our big position. I think it's about 60K. So in gold. So I mean, whatever gold does, that's kind of key for the day. But we're going to add some more positions tomorrow. I'll get into those in just a minute. We've got 10 long Google, which has got crushed today. So, I mean, we would have been up even further if it wasn't for our gold. We were short Uber, XOM, and AAL, sorry, today, American Airlines. 13% down on AAL. Uber was down almost 7%, and ExxonMobil down almost 5%. So those shorts paid off big again today as well. So that was pretty huge. So that's all those current positions. Now the ones we're looking to add on our board, let's see if you can, well, that doesn't really blow it up any bigger, but anyway, let me see if I can do this. Switch to Streamline video. Anyway, we'll start with the first one. I'll just do them in order. There's no order priority here. We'll just start with Trill. Okay, Trillium Therapeutics. Okay, let's get off that. Let's go to the daily. Okay, let's blow it up a little bit so you can see what's going on. Okay, this one already had a massive run. Okay, so this is dangerous buying at this level. You can see it was basically dead. This company was down to 25 cents, and now it's phoenixed. It's out of the ashes, but it's already had a huge run. I mean, literally in the last 5 days, it's been up like 100%. Okay, this is not going to be a heavy position. But now if I blow this company out, blow it up, you can see that this was up to $12 a share at one point. 12. So it's at 7 now. So this is why I think there's still room to run. Even though this thing is going pretty vertical, you can see the cup and handle formation here. I still think there's potentially room to run. Let's put our main resistance line here, which is gonna be right where it's basically at. You can see a bunch of different resistance. We're basically into the resistance now. But this is definitely highly volatile, highly speculative. We're only adding 3K to it. So it's not a big position, but it's a position that works against the market. Market went down today. Okay, this went up. So I like things that work against the market, that it doesn't automatically go up when the market goes up or down when it goes down. Okay, this is a general effect of what's going on in the world globally. Okay, so this is a speculative stock, and I'm getting into a little bit late, but I think there's some room to run. This is a short-term position, maybe 5 days, 10 days, maybe maximum a month potentially. So anyway, that's Trill. Going to add a small position there to hedge some more. Going to add SEDG, SEDG, or Solar Edge. Okay, Solar Edge about 140 plus a share. Right now 137 a share. Let's blow it out so you can see the big picture here. Okay, this company was down in 2017 to $16 a share. It's up to $140 a share. This is a best in breed solar. I haven't found another solar that's really doing as good as this company. Now let's close up view on it. you can see even during, you can see it got hit in the market hit, but it's bouncing back pretty solidly. Another one that was up today when the market was down. That's a good sign. Okay, they had earnings, they had good earnings, and the only reason this thing isn't shooting up higher is because of what's going on globally. Okay, so I think there's some room to run here. Granted, it's at a pretty good high, but you can see the trend. It's above the 20, above the 50. It's above the trend. I don't mind adding a small position here and seeing if we can hedge a little bit more with this one. So solar, therapeutic, and now Gilead. This is another science company. Basically, adding, they're working on essentially, geez, why am I always blanking on this one? Okay, Gilead is working on, I wouldn't say a cure, but some way to kill the current virus. Okay, so that's the deal here. So, and anyway, you can see this one is super volatile. Okay, and it's at 76, but once again, let's back it out. This company was all the way up. Let's put some resistance lines on here so you can see what's going on. The main one is right here. Okay, another resistance is even higher, 124.88. Right now, this company is at 76. So to me, even though it's running up, I can see an advantage buying this because it could potentially, the next leg or the next resistance could be coming soon at about 78. And if it breaks that, it could be testing potentially like 85, 80, 82, sorry, or 88. So, and this is another one that's just hedging this crazy market. Okay. So, small investment, a small percentage portfolio, 3,000 out of 180 is what? Let me do the math on this really quick. 3,000 divided by 180. Give me a second to do this. Anyway, let's see why I'm struggling here. Oh, Jesus, I can't get this one. 3,000 divided by 180,000. Why is my... Okay, it's 1.6%. So just because I'm adding 3,000, 3,000, 3,000, I'm really only adding 5%. Okay, and maybe about 10% or 15% of the cash is going into these positions. So adding 1.6%, 1.6%, Gilead, Trillium, and geez, what was the other one I was talking about? Oh, Sedge, the solar. So adding, 9,000 to those tomorrow at some point, probably into weakness or maybe just after the first 10 minutes or so of the market, so I can get an idea of what's going on so it settles down into a normal motion of the market. You'll notice in the first 10 minutes, the last 10 minutes of the market are crazy. You have to watch those very carefully. After that goes, or after the first 20 minutes or so, I get an idea of what general directions we could be heading, or just where it gapped up to and where the, all the stocks kind of, follow their base for the day. Okay, so anyway, that's the plan. I wanted to share that. I told you guys I'd let you know when I'm adding positions and why I'm adding those positions. I'm still waiting to get into space, and you can see why. Let's go back to space real quick. Virgin Galactic, you can see it's about to break. It's literally in the flag, okay? But this is a downward flag. You can see it trending down, but it doesn't mean it can't break up and start forming an upward trend. If it does, that's when I like buying into this, okay? There's going to be a lot of news, a lot of popularity around this company, or up until their actual flight with Branson in July potentially, or August, or depending if they push that back or not. So but anyway, you can see it could break down here, and if it does break down, we could be testing $16 a share or whatever. So I don't want to make a commitment to this early. I want to give myself a little bit of leeway, a little bit of time for some patterns to form here on an upward pattern before I start buying in. Even if we have to buy in higher at 25, 26, what's it at now? 24? I have no problem buying at 26. We sold at 32. We bought in at 9. We already cashed out 12,000 profit on that move because we caught this early. And now we basically want to do it again, make another 10 or 20,000 off this position. Okay, that's the move. The question is when. I don't want to just jump in and randomly guess. I don't like guessing at things. I like having a lot of data points behind it saying, oh, wow, okay, this company keeps going up and up and up. Okay, perfect. You know, or this company is tanking. I don't want to be involved in it. Okay, you're going to see the patterns. You're going to see what's going on. Right now, we're into the wedge. Something is going to happen. I mean, we could go sideways. We could just go sideways for a month too. That's potential. We could break up north. We could go sideways, or we can go down. Obviously, those are the only real options that stocks have. So let's get a better visual before we make any commitments to things. So anyway, that's the plan. I want to give you guys the heads up of what I'm doing. So we'll break it down via the shares. So let's say $7 a share or whatever for Trillium, and we'll buy what is it? Let's see. You know, I just basically take $3,000 and divide it by $7 a share, and then we get about 428 shares or whatever. So I just round them out to make it a even number usually. So I'll just buy like 400 shares or whatever. You know, when it's, let's say, the Sedge company, what I'm doing here, let's pull up Sedge. Sedge is at 137. I'll do the same thing. So I try to do it based on the number, the money wise, and the percentage of the portfolio, not on how much the stock is. So the stock, if I divide 3,000 divided by $137 a share, that'd be 21 shares, 21.87. So I'm just going to buy 20 shares of Sedge if I'm buying long. So that's the plan. So you can see what I'm doing. I'm playing percentages of my total portfolio, not, oh, this stock is cheap at $20 a share, so buy $10,000 worth. No, that's not how I'm going to do it. I do things based on the percentage of the portfolio, how much risk I want to take in that specific stock. So if that makes sense to you guys, and you guys do the same thing, comment on it. I want to know if that's how you guys buy. Do you guys buy based on a percentage of your portfolio, and that's how you choose how many shares you buy? Or how do you choose how many shares you buy of a specific company, or how much percentage you put in a specific company? Okay. Oh, last thing I want to talk about, subscribers. You guys, on the last video, I want to talk about a bunch of the subscribers. First of all, Bruce, he's huge, long Tesla. He's like me, very pro Tesla. I'm out currently, but he's a super long-term holder. He's holding into 2021 and plus. So, and I've been in contact with him for months, ever since we've been tracking Tesla from the beginning. Me and him have been following this meteoric rise, and we've had a lot of good, you know, back and forth on Tesla. And we're obviously both super long-term, 5 years, 10 years. This company is going to be in the thousands, if not 5 or 10,000 per share, you know, in the next 5 or 10 years, if they, you know, keep doing their thing. So, but anyway, so he's big long there. I'm big long, long term, but we're, you know, currently out right this second. Let's see who mentioned Marvel. Let's see if I can pinpoint it. Let me get off the drawing mode. I think I just lost it. I lost my note. Anyway, Marvel Tech Group, I should say, not Marvel, but okay. So anyway, this company is just popped like huge percentage, up 10% today. So if he was still invested in this, which I think he was, he got a big boost from that. That's a huge boost. But let's blow out the chart a little bit. And you can see Marvel has had a really long run since 16. It was down to $8 a share. So this stock's still a couple 100% up, 300% up. So as far as, I don't know enough about the company internally, haven't done a lot of research on it, but as far as the chart goes, I like it. They got hit just like all the stocks got hit, but a big bounce. They got a big bounce today. Now, one of my guys, okay, Jacob Danielson, He was talking about hedging LYV, CCL, and TCOM. Oh, his hedges really paid off. 7%, 14% on Carnival, and TCOM, which is a Live Nation Entertainment. That's another. I'm sorry. TCOM is the Trip Advisory type, and that was down, I guess, 2%. So he did really well. If he was shorting all those on a short term, he crushed it today for sure. Let's see, Workaday, Market Scraper. Oh yeah, Market Scrapers. We're checking Workaday, CRM, which is Salesforce, and Nvidia. Nvidia, I love. Okay, not just I love it because they are the dominant chip company broad. They are. They're it. They're the gaming chip company just globally. I think they're the best in breed for sure. I don't even have to think about it. I can't think about another company that dominates like they've dominated. If we blow up their company, let's blow them up. They were $3 a share back in 2003. Can you imagine having 10,000 shares at $3 a share or whatever back then? Holy cow. You'd have millions of dollars right there just investing in Nvidia over the last 20 years. You'd have $1 million there. Think about it. That's crazy. So I mean, I'm still a big believer in this company. You can see it took its normal hit from the crash, but it's bouncing back, which is a good sign. You don't want to take a hit and continue just taking a hit. That shows that this is the best in breed. But let's go back to Salesforce. Salesforce has also been just a monster. I mean, come on, $6 a share. Now it's at 180 plus a share, whatever. I mean, 170. This has been a monster too. So Workday, also WDAY. Let's go back to Workday. Okay, Workday was, wow, I guess it was, I can't go back any further than 13 at $47 a share. It's been flying. I mean, it had its sideways action from 14 to about 17, but it's been up monstrous. Okay, another good one. So those are all good long term, but you can see it getting hit here, and it's taking a bath here. And I think it's maybe because of the global exposure. I really don't know. Don't study the company. I'm just giving you a view of what I think of the company long term, and the chart right now. Chart right now is a little scary. Like, I would not be happy if I was long in this company right now. Going from 200 down to 165, you're talking about losing $35 a share. I mean, let's say 10% would be 20, 40 would be 20%, so it's about 18% down during this, and that's pretty bad, but not nearly as bad as let's say Carnival. Okay, Carnival, since this happened, let's say Carnival was at about 44. Oh my gosh, and now it's at 28. So it's down, well, it's about down 25% or so, maybe more. That's pretty brutal for Carnival, and I don't see any sign in this chart. This is bleeding to death right here. This is not good. Okay, and also LYV is bleeding bad. Okay, you can see the difference. There's that, and there is Nvidia. Nvidia is not bleeding to death. People are just waiting to gobble Nvidia for cheaper. So anyway, that's that. And then let's see. Somebody mentioned Delta, that Warren Buffett was buying Delta now. Well, if he bought it in the last couple days, he just took a 7% hit off of whatever. If he bought the day before yesterday, and that's probably where that green that it probably popped up, and he just got smacked for about 8%. But he's so long term that he would never think short term. He's thinking, okay, this is cheap now, I'm buying it, perfect time to buy. When it's low, can get more shares. Okay, so he doesn't care if it bottoms. He doesn't really think about it that way. He just thinks, okay, this value is good at this price, I'm buying. A lot of people play the market that way, based on valuations. I play via trends. A lot of people play via valuations. So you're going to get a lot of mixed signals there. If you're a trend or a technical analysis guy, you're going to be following not the price of a stock, that the valuation of a company. You're based on what the buying and selling pressure is. Where the valuation type guys, and I think those are the two different technical guys out there. The valuation guys, like Jeremy from his channel, he is all valuation. He barely looks at the charts just for, just for broad data, but he's looking at valuation of the company and the share price, where I'm looking at, let's say, the trend and where the company is going up or down on a trend basis, short, mid, and long term. He's a long term and evaluating by the company metrics. And that's important too. That's why I watch his channel, to get the metrics, to get those. That's let somebody like him do the research for me. I'm all good. I track all kinds of stock channels. Okay. So Blaze Capital, I track because he's very short term. He's a trader mindset. He knows a lot about the internals of trading. Jeremy's stock channel that I talked about, and probably like 5 or 6 others. I got to think about it offhand. Let's see. I mean, literally any stock channel I can get a hold of, I'm tracking it to get more data to make good decisions myself. Anyway, back to the charts. We'll go to Spice because some people were talking about Spice. We already talked about that in detail, and we are waiting for this flag break, inverted flag break, one way or another. Uber. Uber is kind of ugly, but I can see a potential bear or bull flag forming. Let me do this real quick. Okay, this is looking a lot like a flag too. It could be heading up this channel, but it could flag break down at any point potentially. Is a bear flag. It shoots down, doesn't know what to do. Everybody's, oh, it's cheap. It's $32 again. Well, let's break out the distance here. Well, it was $25 a share months ago. When was that? November? It was $25 a share in November. So if you don't think it could possibly come down to $25 a share again, you've got to think about it. Okay, these patterns are forming it. I know the company is getting stronger. You can see this good trend upward. But remember, Uber started in the mid 40s. I think it IPO'd at 44. 44.95 was the high of the IPO. It shot up to about 47. It went off the cliff. The company's been losing money for a long time, and I still think they're losing money. And supposedly the company said that they should be profitable next year. Okay, so that was a good sign, and the company's been running up ever since. I think notification of that. They said, "Hey, we're going to be profitable soon." Okay, well, time to buy the stock. But right now they're not profitable, and that's a problem in this type of market. So let me blow that up one more time. And this is why I'm short. I mean, I'm not short a lot, short a few $1,000s worth. It's not like, oh my God, I'm betting on the world that Uber's going to fail. I mean, honestly, I think Tesla is going to put Uber out of business at some point in time. That's my long-term thesis. That will happen because unless Uber is fully automated and all on electric, Tesla's going to crush it. If they're all electric and all autonomous, no driver, no gas costs, Uber has no chance to compete against that. No offense to anybody holding Uber, but that's, to me, that's my long term, like 2 or 3 years from now, when Tesla gets in that market, Uber is not going to like it. They're not going to like having Tesla as a competitor, period. So why would I do anything positively buying wise in Uber right now? I just wouldn't do that. So anyway, that's why that's not why we're short now. We're short now just because they have a lot of global exposure. So if they have global exposure, that's not good for the company. How many people are going to want to get in a car that's shared by a bunch of other people and you're touching surfaces left and right? Okay? So, I mean, to me, it's a no-brainer. I'm just using general logic to make this call. I mean, it doesn't have to be a great call. I'm actually in the hole, I think, on this short because where we happened to buy it was just not in an ideal spot in the day. So anyway, that pretty much wraps it up for the day. I wanted to, talk about the subscribers watch list. So be sure to subscribe to the channel and put down the companies that you love or the companies that you're shorting. long or short term, long term, or midterm. I don't really care. I like tracking new companies. And there's a lot of companies that you guys, as subscribers, have got me into. I mean, and a couple of them we're purchasing tomorrow. So, like I told you guys before, you guys help me make money just like I want to help you guys long term. I don't tell you, hey, buy this or sell this. I'm telling you, here's what I'm doing. Here's why we're doing it. If you think that I'm right, if you think that I'm wrong, I mean, either way, I kind of want to know, and I'm just trying to do the best I can. So, especially in a market like this is a crazy market. I saw this, I was day trading in 2008 when this happened before. So, I saw it happen. I wasn't going to just sit there and be punished during this downward slide. I'm actually going to make money every day. Well, not every day, but as many days as possible as the market's going down. Even if it's going sideways, I don't care what direction the market's going, there's always ways to make money. Okay, so anyway, I don't want to go on a rant again for too long, so I hope you guys like this video. And I'm building the charts. Remember, I just got this program set up, so I'm just building these charts. I'm just starting to track more and more companies. So throw some more companies at me. Tell me what you think about the companies, and whether you're long, short, whatever, and I'll put a chart on them. I'll see what's going on. I'll let you know if I see any breaks on a week-to-week basis, even every few days potentially, and I'll let you know what I see, and maybe that'll help you with your positions and in your situation. All right? Thanks a lot, and take care, guys.